Welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of 9th March and the trade setup for tomorrow. See what we discussed yesterday. If the market is in between this range, we'll see whether the market is breaking to the upside or to the downside. Please go and watch in yesterday's video that it was very clearly mentioned about the level where we should take a trade. See, we discussed if the market breaks to the upside or to the, we'll see whether it is breaking to the upside or to the downside. And if the market breaks to the upside, the momentum will be very slow and it is better not to take any trade. And if it breaks to the downside, don't jump into the trade. If the market breaks to the downside, it will definitely give us a dip at the central CPR, and at central CPR we should take a trade. Otherwise, if the market breaks the bottom CPR and if it continuously comes to the downside also, we will not take a trade. We always think about the stop loss, not about the target. So after breaking the CPR, we just waited for this retracement. After this retracement at the CPR, yes, you can take a put position here at this CPR and see how the market reacted to our levels, and it was a clear 100 points movement from that point. So if you have taken a trade after breaking this CPR, yes, your stop loss will get hit. That is most of the traders mistakes. See, everyone will think like, yes, it is breaking CPR, so we should take a put position. It is not about breaking CPR. It is about taking an entry point. Entry point is more important. See, if you take a put position here at this point, yes, your stop loss will get hit. Being an option trader and also an expiry day, if you see, this 1 hour consolidation is enough to wipe out your capital. So you should always think about entry point, and your stop loss should be very minimum. Here, if your stop loss will be above the CPR, if you take an entry here at this point, your stop loss again will be above the CPR only. So your stop loss is going to be very big, and that is the only trade where we can take a put position according to our setup. And we cannot take this trade, right? See, the first 5 minutes candle is a bullish pin bar, and it is not at any of the Camarilla levels. And this movement is not according to our setup. Our setup is to take a trade after breaking to the upside or to the downside. And downside of the trade is very good to take. And also we are very sure about this L4 breakout. We clearly mentioned that L4 is going to be acted as a major resistance. And see, if you just miss to take this trade, this L4 breakout is there, right? After this L4 breakout, here this retracement is there, right? So then here you can take a put position, but I don't suggest you to take a put position here at this point, since the CPR is very wide, because there may be a chance the market may rest of the day will be sideways also. So this is the good entry point. If you just miss to take this entry point, no problem, this type of pattern will again come to you in the next days. So if you miss this type of trade, you should wait for such a day. And see, here it was clearly L4 breakout and it was clearly reached L5, and we'll move on to the next day. Here again the CPR was very wide. See, compared to this CPR, again this CPR is very wide. So again the market is going to be sideways tomorrow. For sure the market will be sideways only. If the market opens flat, and if it comes to this point here, if you see a confirmation candle, then you can go for the call position. Without confirmation candle, don't go for the call position, because the CPR is in downtrend, right? To be on the call side is not so easy. So if you see a confirmation candle only, you can go for the trade. Without confirmation candle, you can't take a trade. And if the market opens flat and if it comes to this point, I suggest you to don't take any trade. See, here the CPR is wide, and what we discussed, if the market is in between this range, then you can go for the put position if it breaks to the downside. But I don't suggest you to take a call position if it breaks to the upside, because the CPR is very wide, and taking a call position after breaking CPR is not easy. After crossing the CPR, the bulls gets tired, and if you take a call position here at this point, your stop loss will get hit. The market will be too sideways, and the only setup where we can take is the L3 support, from L3 up to CPR. And if the market opens a slight gap up, and if it is breaking to the top CPR, of course the market will be bullish only, but the entry point is more important. Many of the traders think like, I'm on the call side, but why I'm not getting the profit? I'm on the put side, but why I'm not getting profit? But here, see, you can be on one side of the market, but you should be clear about your entry point. Your entry point is more important than your prediction. See, if the market breaks to the upside, then it may consolidate for more time, and around 12:30 to 1:30 there may be a dip again to the central CPR. See, there may be a dip to the central CPR. If you see a dip to the central CPR, and if it is forming a supporting candle around 1 o'clock, then you can go for the call position. Without that pattern, if you see just like the market is going up, don't go for any trade. It may pretend you like going to the upside, but it again and again will be sideways only. That's all about see, it is not possible to open the market between L3 to L4. If the market opens between L3 to L4, then it will be bearish only. But taking a trade is not easy if it is opening between this point, because 20 EMA will be very far, right? See, here this is 20 EMA. So if you take a put position just by breaking the CPR is not a good thing. So by seeing a clear price action, will be on the call put side only, but you need a clear price action for an entry point for a minimum stop loss. Thank you. I hope this video will help you. Please subscribe to our channel.